Every trader in the world wants to find the perfect entry for their trade. The issue is, how do you find that perfect entry? Well, I got good news for you because in this video, I am going to show you my favorite and highest success rate sniper entry points on any trade, on any indices, on any forex pair, on any cryptocurrency. Let's get into it. Welcome back to the channel, everyone. My name is Ajwat, and you are watching my YouTube channel where we talk about everything related to trading to help you become consistent and profitable trader. So when you are day trading the right way and you want to use high leverage, you want a tight stop loss. You don't want the trade to go in a drawdown and have to wait for your take profit to get hit or the trade goes backwards on. So this is the strategy that me and my students use on a consistent basis to find the best sniper entry for our trades with highest success rate and highest probability of the trade going in my direction. Now, I would really encourage you to watch this video till the end. Even watch this few times and then practice this strategy until you master it. Because believe me, this is the most powerful trading strategy that I personally use. So without further ado, let's get into it. So there are few things I would like to explain. These are the trading terms that I use when I teach to my students at Falcon Trading Academy, and I will be using the same terms here as well. So first term I will be using a lot is called pullback. To make it easy for you to understand, a pullback is a correction, meaning once we have a strong impulse movement either for buy side or a sell side, when after a strong impulse movement, when we get a correction, that is a pullback for me. Like market has started its move and it is just coming down slowly to get a better price to continue its move. The second term I will use is called swing. So whenever we get a pullback, the pullback comes in multiple swings. I personally like to see three swings. Now you might be thinking, what is a swing? A swing is basically the movement for a pullback. Like this movement from a sell is a pullback. Now there is one very key point to take from here. I like to see three swings of pullbacks after impulsive move, and I only count a movement from pullback a swing if the movement comes lower than its previous movement. Like here, as you can see that when we had our first strong pullback from the sell after this big impulsive buy movement, I would only consider a second swing a real swing from the seller's pullback if it crosses this low of first pullback and struggles to go up. Meaning, you can see that we have our pullback here, the first swing of our pullback. Now, this movement from sell would not be a swing for me because it never really crosses the low of first swing, which is that point. So for me, the second swing is when this movement from sell made a strong movement down and we crossed the price of low of first swing, then I would consider this a second swing. So we have two swings so far. Up until this area, we have our first swing here and we have our second swing here. And I am considering this whole movement my second swing because it has crossed the low of first swing and the buyers after the second swing are struggling. Now, once we get three swings of pullback, the most important part here is the third swing must be a fake breakout. There should be a structure like the market after second swing starts to develop the range. As you can see that the market after the second swing starts to develop the range. And we will only consider the third swing a swing if it shows a fake breakout. Now tell me, when you see that this is the movement from the pullback which I considered our second swing, and we have our lows of second swing here. And after the second swing, we started to have a range. You can see here, we are having a range. Now, when I said that we will only consider our third swing a real swing if we get a fake breakout which shows that we cannot go below the lows of second swing and price gets rejected very strong. Now, once you see here, where do you see a breakout? I said that we will only consider a swing if it crosses the previous lows of swing. Now, can you say that this is a breakout? Like this is a breakout because we tried to cross the lows of second swing but we failed? The answer is no. Because if you notice that we never touched the lows of second swing, we never really touched this area until this movement here. Now, as I said, that I will be considering a third swing only if we get a strong and fake breakout which shows that we cannot go below the second swing. And as you can see here, that the market came down very aggressively. We tried to go below, but instead of struggling from buy, we came right back in. So now we have three swings of pullback after the strong impulsive movement, and in all these three swings of pullback, our third swing is a fake breakout. This is where we get ready to take the sniper entry. Now we are all set to take the trade. So whatever time frame you are using, as in our case I am using 4 hour time frame, we will go down one time frame lower for our sniper entry. We have to go down one time frame lower for an entry, and there is a reason for that which I will show you in a bit. And one very important thing I need to mention here, that this technique is applicable to all time frames, meaning you can find the impulsive movement and then three swings of pullback on any time frame like daily, 4 hour, 1 hour, 15 minute. But once you get a complete structure, you have to go down one time frame lower for your entry. For daily structure, 4 hour will be your entry time frame. For 1 hour structure, 15 minute will be your entry time frame, and so on. In our example, 1 hour will be our entry time frame. All right. So now we are all set. So let's go down one time frame lower. On our lower time frame, which is 1 hour in this case, we will only focus on the third swing, which is a fake breakout. We have our third swing here, and then the market came back aggressively after the third swing, which made this price a fake breakout on a higher time frame. So now we have to find an entry, but the question is, where do we take our sniper entry, where we will place a stop loss, and what will be our final target? Let's talk about that. If you notice that after third swing fake breakout, we have a very strong movement to the upside, as you can see here. Now when on entry time frame we see a fake breakout movement and it is strong, I start to wait for the market to come down again one last time, show us some struggle from sellers, but we should not cross the low point of fake out. This is a very key point here. We should not cross the low point of a fake out. So the key here is we must come to the low point of a fake out, and there should be enough struggle from sellers, and we must unable to go below the lows of a fake out. Once the market starts to show some struggle from sellers towards the area of false breakout, I wait for enough rejections from the sellers, at least three rejections. And once I get three rejections from the sellers and I see that we are unable to go below the area of a fake breakout and we have enough rejections already, I place my trade after the third rejection. So, where I am going to place the trade, let me show you here. As you can see that the market started to come down towards our lows of false breakout. Initially the sellers were strong because I said that we should have a struggle from the sellers. Initially the sellers were strong, but after their movement the buyers came back in again. We have our first rejection because we could not cross the lows of false breakout. Once we had our first rejection, I waited for our second and third rejection. Now you can see that the market came back again. Now this time the sellers came down, but the first thing that they are not as strong as compared to their previous movement. The second thing, they are unable to stay below the lows of false breakout. They came down and they went up aggressively. Now we have two rejections and I am waiting for our third rejection, and third rejection should not be able to cross this price again. So as you can see that when the market came down and the buyers came back in, made our second rejection, sellers tried again, and this time we have our third rejection here. Now this is the point where I will place my trade. Because we have enough struggle from sellers, we are unable to go below this area, this whole area. So anywhere here, our entry would be very great. So now we have our entry point. But the question comes, where should we put our stop loss? So the answer to that question is our stop loss should be just below the multiple rejections at lows of false breakout. Right here. Just below the rejections of the false breakout. It should not be below lower than that. Just place your stop loss below the rejections area, and because we want to maximize our profits and we are on a smaller time frame to get a sniper entry, so to place our take profit we have to go back to our original time frame, which is 4 hour in our example, and the take profit should be exactly at the area from where the first swing of pullback started. Now the take profit, as I said, should be at the area from our first swing started, which is right here. So as you can see that we are taking our entry from here, we are placing our stop loss here, and we are targeting this area. Now let me show you the risk reward ratio here. Now you can see there is a high rewards on this trade. With a very tight stop loss, we are targeting over 12 hour in just one trade. Now you might be saying, Ajwat, but we haven't reached our take profit yet, and the market is way below our target. I know that, and there is a reason why I wanted to show you this example. You might be watching this video after 2 months when I will upload it. So I want you to search 28 June 2021 on TradingView whenever you are watching this video and see it for yourself that how this trade hits take profit. Now this is my very high success rate trade setup, and there is more than 90% chance that it will hit take profit. I said 90% chance because this is the game of probability and you have to be prepared for anything. But if you know your edge in the market and you understand how price action works, there are high chances that you will be very consistently profitable if you follow your trading plan. So I hope this video provides you value. If you want to master this strategy, I would encourage you to watch this video a couple of times, practice this again and again, and then see it for yourself that how profitable this strategy can be. So this is it for now. Thank you for watching this video, and I will see you in the next video.